I think that silver is now viewed as much more critical and crucial for industry. We see investment demand, of course, ebb and flow, but there's at least anecdotally some in the last couple of months we've seen some tremendous stories about people flocking to bullion dealers and buying silver. But the mining executives now, I think they can be more confident of higher and sustained higher silver prices. So they'll be more willing to commit to exploration, to expansion, to acquisitions. And it's a small space. We're seeing a lot of support politically for critical minerals and silver potentially in particular. So that absolutely is a new dimension. And I think that is just one more thing that makes sustained high silver prices just that much more likely.
The silver market has staged one of the more remarkable recoveries of the past several years, advancing steadily toward multi-decade highs despite repeated skepticism from many corners of the investment community. What has been notable about this move is its character. Rather than a single dramatic parabolic spike, the advance has been measured and persistent, with days of meaningful gains, but an overall pattern of steady accumulation. That measured ascent has left silver at price levels that would once have been described as extraordinary, and that steady upward pressure is precisely why many long-term investors now regard the recent pullback not as a reversal, but as a recalibration, a temporary consolidation that clears the way for another leg higher. Beyond the price action itself, there are multiple fundamental tailwinds that are materially different today than in past cycles, and they are what make the current consolidation look constructive rather than concerning. Industrial demand, particularly from solar and battery applications, is expanding in ways that official forecasts have tended to understate, and technological shifts in panel manufacturing are increasing the silver intensity per unit of output. At the same time, recycling and primary mining supply have been effectively flat for a decade, meaning that rising consumption exerts disproportionate pressure on available ounces. When you combine structural industrial demand with a re-energized investor base, the supply-demand arithmetic begins to favor higher prices over time. In today's video, renowned silver bull Peter Krauth lays out the combination of these technical, industrial, and policy drivers, and explains why he expects silver's momentum to continue into 2026. Watch the video to the end so you don't miss his expert observations on policy support for critical minerals, the new solar technologies that raise silver intensity per panel, and why mining executives are now more likely to commit to exploration and expansion. If you find this analysis useful, hit subscribe and the bell so you don't miss future deep dives. We appreciate the support and hope you enjoy the video.
Can silver really go higher from here, given that we're at almost all-time highs?
So my short answer is yes, absolutely. And to qualify that a little bit, if you look at the last two times that it reached 50 or close to 50, 1980, 2011, both of those times we had parabolic rises. This time we had it might feel parabolic to some over this, especially the last, say, 6 months or so. It has been a very, very sort of steady rise, and you had some days full dollar gains. This is a lot more steady in terms of approach to $50. It's a lot more sustainable. We had it meaningfully past $50, up to $54, as you said, and now still hovering near that level, even though it has pulled back. So very, very different kind of approach to the $50 level. And I've said that that was going to be a milestone, a huge milestone for silver. It had been until recently, till it took out $50. It had been the only metal that had not meaningfully surpassed its 1980 high. That's now the case, although again it has pulled back. But I do believe that it's going to regain 50. 50 will become a new floor, and for various reasons we can talk about, move considerably higher from there.
Why are our best metrics of demand consistently below the reality year after year?
I believe that these forecasting groups, they purposely try to remain conservative. They want to maintain credibility and not sort of over promise, so to speak. And so you're right. Yes, through the 2010s, we've seen that the IEA kept projecting 5 years out. Each year that they would project for the next 5 years, if you look back with the benefit of hindsight, they were off by 2/3. So installations were 3 times what they had been predicting, and this was year in, year out. So it is possible that installations, solar installations in China could be slowing. I'm not sure about plateauing. Maybe at least the rate of growth is slowing, but there are some things to consider. First of all, you've got this, we've talked about this before, but you've got this new technology that's kind of taking over. These are acronyms, but the established one is was PERC. Now the new one is TopCon. Already last year, I believe, 63% of new solar panels were being produced with this new technology. That requires 40 to 50% more silver per panel. The reason you would do that is because they're more efficient. It justifies the higher cost per panel. You're getting more energy output from that panel. So although the producers, the manufacturers of the panels, have been for decades thrifting and trying to reduce the amount of silver that goes into each panel, I believe that we're going to start to see that trend up. In other words, they will probably start consuming more silver per panel. It'll take some time for this to show up in the statistics, but I think that's what we're going to see. So that's an additional source of demand for silver from, even if demand stayed flat in solar panel production. Now you have this whole added layer of batteries. The cost of batteries and to store the power in batteries is falling and expected to fall by half over the next 10 years. We already expect for 2025 that we're going to see battery installations at 60% of 2023 solar panel installations. So that is really catching up very quickly. And I think the takeaway from battery and solar is that battery helps to make solar what I view as baseload power. Obviously, solar is there when you've got sun, and then the problem is nighttime. But if you can store the if you can store the power that you've produced from solar during the day and then draw on that at night, then you can have this constant baseload power, which you get from things like nuclear, for example, or natural gas, whatever it might be that utilities use, coal, whatever else. And so that just makes solar that much more attractive. Then you've got a few other layers to add to this. You've got the fact that, technology companies, most companies are looking to be greener. They're looking for sources of power that are considered carbon neutral, carbon free. Solar is considered one of those. And what we've seen is that you've got the large tech companies. Many of them quickly went to nuclear, but they were able to tap into underutilized nuclear capacity. And they have the billions or tens of billions it takes to, lock that up very quickly. And because it was untapped or dormant, you can kind of bring it back online more quickly. But if you're looking at new nuclear, you're looking at 15 years. Compare that to solar, you're looking at a year and a half to get a solar farm up and running. So it's 1/10 the time that it takes. And we've seen uptake from tech companies in the US adopting different kinds of power. They're adopting they're adopting solar to the tune of 5 times faster right now over the past year or so. So you see that solar is certainly attractive to them. And you're not depending on a utility that's producing the power and to be connected to that utility. Many times you can actually have, if you've got the land to build out the solar farm, you can be completely off grid, so to speak. So you've got your farm, you're drawing the power from your solar farm, and you're not depending on someone to provide this power to you. That's very appealing. One other aspect to that, if I may, Ernest, and that is what we see in terms of projections for power demand in 2 ways. One is data centers have become a huge thing in terms of requiring power. We're seeing that in the US in particular, where we get a lot of the information regarding that. Data center electricity growth is supposed to be on the rate of about 22% over the next decade. AI power demand is supposed to grow by 31% annually over the next decade. So these are just almost exponential growth levels in these inevitably unavoidable sources of demand for more power. And as we've just talked about, solar is likely to be a key source of that power. And again, silver in the solar panels, silver in the batteries, crucial.
Picking up from Peter's assessment of industrial demand and policy support, it is important to place those observations in a wider macro and capital markets context. When a commodity transitions from being treated primarily as an industrial input to being recognized simultaneously as a strategic or critical mineral, the investor set that cares about that commodity expands dramatically and becomes more heterogeneous. That broader investor base includes strategic buyers, corporate off-takers, sovereign and quasi-sovereign actors seeking supply security, and a growing retail cohort that views physical metal as a portfolio hedge and as insurance against currency and systemic risks. Each of these buyers behaves differently, but their combined effect is to tighten available supply for tradable ounces and to make supply shocks more meaningful in terms of price impact. For well-capitalized investors, a measured pullback is therefore an opportunity to secure physical and paper positions ahead of what they anticipate will be a renewed squeeze. Moreover, the macroeconomic signals that Peter references, slowing growth dynamics in traditional drivers, the redistribution of manufacturing and supply chains under deglobalization pressures, and policy initiatives that prioritize domestic critical mineral capacity, all point investors toward real assets. If the US and other advanced economies are prepared to streamline permitting and to take more direct positions in upstream mining projects, then the timeline for new production can be meaningfully shortened relative to historical norms. That shortening does not immediately create supply. Rather, it reduces the lag between demand recognition and supply response, which in turn raises the strategic value of existing production and inventories. For investors, this dynamic means that scarcity premia can grow not only because of outright physical deficits, but because the market begins to price in constrained future availability.
I think that silver is now viewed as much more critical and crucial for industry. We see investment demand, of course, ebb and flow, but there's at least anecdotally some in the last couple of months, we've seen some tremendous stories about people flocking to bullion dealers and buying silver. But the mining executives now, I think they can be more confident of higher and sustained higher silver prices. So they'll be more willing to commit to exploration, to expansion, to acquisitions. And it's a small space. So I think that's important. The critical metal, critical mineral side of silver, I think, is absolutely a new dimension that has been added to the silver sector. In the US, they have a critical minerals list. As we speak, to my understanding, it's only on a list where silver is being considered along with other metals to end up potentially on their critical minerals list. So it's being reviewed and considered, partly because of the government shutdown that could take a little while longer to get a final answer on. So we don't know. Will that happen? Will it not happen? I think it's significant just that it's been added. This is the first time it's been added to be for consideration. What we have seen, one thing to keep in mind too, Ernest, is that 43% of all of the silver consumed in the US is imported. So nearly half of all the silver they consume, they have to bring in from other countries. So they're certainly not self-reliant when it comes to silver, far from it. And again, sort of an aspect of critical minerals and what we've seen happening. And it's interesting, how you've pointed out that the solar aspect of silver was a more sort of widely seen way that everyone was kind of on board, and it might have been more partisan in some ways. It was encouraged more by some administrations and so on. But this fact that silver may be considered more and more as a critical metal is something that I think all parties are going to be on side with. The world's becoming deglobalized. It's becoming more regional. And we've seen in the US, the administration has taken steps that we have not seen happen for a long time, where they've started to buy into companies. And, we've seen that a little bit on the tech side, but now we're seeing it on the mining side. They're taking meaningful positions in companies that have critical minerals. Lithium, for example, copper, for example. They're starting to streamline permitting. They're making it easier for these projects to come on board and eventually get built out and produce. We're seeing a lot of support politically for critical minerals and silver potentially in particular. So that absolutely is a new dimension. And I think that is just one more thing that makes sustained high silver prices just that much more likely. So we've seen since I believe it was June of last year, we've seen a bottoming in SLV, which is the largest silver ETF. We've seen a bottoming in its silver holdings. They've started to climb on balance ever since then, continue to climb. So that's a definite change in mindset. We've seen anecdotally, bullion dealers are being overwhelmed. We've seen this in China. We've seen it in Singapore. We've seen it in Egypt, for example. People are waiting in line. They want to buy silver bars, silver coins. What I find interesting is the numbers. So the Silver Institute forecasts that this year we're going to be somewhere around 200 million ounces of demand for physical coins and bars. I feel that that's kind of low. That's about equal to industrial demand for solar alone. So a little bit of perspective. Solar takes about 200 million ounces of silver. Let's start at a little bit higher level. Again, I think it's useful to understand sort of the big picture. There's about 1 billion ounces of silver supply every year between mining, about 85%, and recycling, about 15%. Mining has been flat, in fact, down over the last 10 years. Recycling has been flat for 10 years. So we're not seeing any new meaningful silver come to market from either of those. Where we could is if silver prices are high enough for long enough, where we've got silver being owned by individuals and others, they may start to sell it back to the market and help with supply. But for now, we haven't really seen that happen. So silver supply is flat, demand is growing. Demand is at least 15% above supply. So 150 million ounces above. Solar takes 20% of all of the silver. Jewelry takes 20% of all of the silver. And investment demand is expected to take 20% of all of the silver. As I say, I think that investment demand, when we get the numbers for 2025, I think that will have been lowballed. I think that it's going to end up considerably higher. And interestingly, the Silver Institute does not include ETF silver in its calculations for demand. And their reasoning is that, this is silver that's held in an ETF. It's not consumed like industry or like jewelry. It could easily flow back. And my argument is, so is physical silver, investment silver, silver bars, silver coins, and yet those are included. And so I can't square that. But if you include the demand that's flowing to silver ETFs, then the market balance, in other words, the overall deficit, is going to be the third highest deficit in the last 10 years. So that changes the perspective. And that's why I think that it's one of the reasons I think that investment demand is being underestimated, underappreciated by the market.
In conclusion, the path forward for silver is best viewed through layered reasoning. Price action, industrial adoption, policy recognition, investor composition, and supply constraints all interact to generate a bullish forward case. From a price action perspective, the recent pullback resembles healthy consolidation rather than the exhaustion of a trend, and the argument for $50 as a future floor rather than a ceiling is consistent with both the market's recent behavior and with the increased depth of investor participation. For well-informed investors, that suggests a two-pronged strategy. Maintain exposure to physical metal where appropriate, and selectively add to high-conviction paper positions on weakness, while using disciplined risk management to protect from episodic volatility. From a fundamentals standpoint, the most compelling elements are the structural increases in industrial demand and the stagnation of primary supply. Technological shifts in solar panel manufacture, particularly the adoption of processes that raise silver intensity per module, are likely to produce a multi-year step change in consumption that official forecasts have repeatedly underprojected. At the same time, mining output and recycling have not meaningfully expanded in the way that would be required to meet that incremental demand, which creates an increasing probability of persistent deficits unless higher prices incentivize a material supply response. That imbalance is the engine behind the bullish thesis, and is why investors who are prepared to take a medium-term view may be rewarded. It is also essential to recognize the role of investor psychology and structural flows. The re-entrance of generalist investors, the bottoming and subsequent accumulation in major silver ETFs, and the surge in physical retail buying in multiple jurisdictions collectively amplify price moves in both directions. When a market that was once marginal to many portfolios becomes an explicit allocation for a broad set of investors, volatility can increase even as the underlying trend remains intact. Savvy investors, therefore, need to account for shorter-term liquidity squeezes while positioning for a longer-term structural improvement in supply/demand dynamics. If you found this analysis helpful, don't forget to like and subscribe for more data-driven takes from experts. Drop a comment with your view on whether $50 becomes the long-term floor for silver. Thanks for watching.